Oliver Sloup joins us. He's from the edge of the trading floor in Chicago. He's with Blue Line Futures. How are you, and what's going on the trading floor?
Well, it's great to be back from the kind of abbreviated holiday week last week. We're getting some more volume coming into the market, which is nice to see. And it's going to be very key to have that volume throughout the week with some big reports here looming. We've got crop progress here this afternoon, and that all-important WASDE report later in the week can be very important as far as money flow and setting the tone going forward over the next couple of months. Now, for corn, we pulled back a little bit from the overnight session, but still holding relatively well, just trying to close that gap. That gap from the overnight comes in 441.5 to 443.5. I think this is a buying opportunity on the first test. We still remain pretty optimistic and upbeat on that corn market, but really want to see some positive news get us out above technical resistance. Technical resistance to start the week comes in 447.25 to 454.25. A relatively big gap for us, but very important. This is a breakdown point from the end of June, and also represents what could be a head and shoulders formation. If we stall out against here, it would form a bearish head and shoulders pattern, which would not be good. So we really want to see some positive fundamental news to get us out above that significant resistance pocket here this week.
A lot of analysts seem prepared to take this Thursday report with a grain of salt, though, saying the only numbers that might mean anything would be the supply and demand numbers there.
Well, that's exactly right. Taking it with a grain of salt. And it's hard to argue with the numbers, though, because we've seen the reports be taken with a grain of salt. But the price action obviously is taking them with a little bit more than just one grain of salt. The market has been under pressure after the release of the most recent reports showing that those acres have picked up again. I don't necessarily think they're there, but you've got to play these numbers one day at a time. I think ultimately we'll see those walk back over the next couple of months. But until then, we've got to play what's in front of us. Trade the market you have, not necessarily the one that you want.
Looks like it's pretty obvious we have quite a bit of harvest pressure in this wheat market right now, huh?
Yeah, and wheat, we've been working with a lot of producers and clients here over the past couple of weeks, thinking that the wheat market will be the laggard. We continue to believe this will be the case. Potentially, if we get some momentum in the corn and the soybean market, that could spill over into some positive money flow in wheat, but we don't think wheat has the ability to really rally on its own here. So we're looking at taking advantage of these higher prices and locking some things in for producers as far as the technical support goes for that Chicago September contract. $5 support at the end of last week, psychologically significant. If we give up ground below there this week, I wouldn't be surprised to see additional pressure come into the market.
Just real quick answer here. Would wheat be lower if it was not for the corn?
Absolutely.
Okay. That was very quick. Very good. All right. We'll come back in a moment and we'll take a look at our livestock trade on a Monday as well. We're talking with Oliver Sloup, and we'll be right back.